gentlemen, you are most welcome today in this Sustainable Finance Conference. Sustainability finance is now firmly in the spotlight as a result of COVID-19 pandemic, which we are still experiencing up to now. What we do know is that the need for humanity to become more sustainable has never been as urgent as today. I have every confidence that our resilience will accelerate, and as we do more to build our economy back together, humanity will have to embark collectively on a more sustainable journey. We saw this in COP26, and we all heard the striking message that was given to the world by the Prime Minister of Barbados, Maya Mottley, which was really an impassioned plea for the world to act. In my view, what this conveys precisely is that the crisis of our time is entrenched, it is catastrophic, and it transcends systems associated with the people of the planet. Sustainable finance has a critical role to play in addressing all the risks that we are going to be talking about. We are looking toward it to give us product and services that will be solutions and address social and environmental issues.
Now, Africa has no choice but to join the global drive towards limiting greenhouse gas emissions. However, this action must be considered within the context of Africa's just transition towards a low-carbon economy in a manner that recognizes the deep energy poverty across the African continent. I'm proud to say that the South African government remains firmly committed to contributing our best efforts to combating global climate change. President Cyril Ramaphosa has created the Climate Change Commission to research and identify pathways for a just transition to a low-carbon economy and a climate-resilient society by mid-century. As a country currently heavily dependent on coal for electricity generation, we need to ensure that those employed in the coal value chain are not excluded from any planning and policy implementation towards this low-carbon future. Transitioning to a lower carbon economy will undoubtedly require extensive policy, legal, technical, and market changes to address mitigation and adaptation measures required related to climate change. In this regard, it is important to note that Eskom, our largest greenhouse gas emitter, has committed in principle to be a net zero emitter by 2050 and has already released calls for proposals to repower and repurpose Komati Power Station in Mpumalanga. Studies to facilitate similar initiatives are underway in Grootvlei, Hendrina, and Camden. In the face of the climate crisis, we have two choices. We can resist change and continue living the way we are doing with the inevitable economic and social consequences. Or we can be brave and pragmatic and seize the opportunities presented to us as we transition to a low-carbon future. If we are to ensure that no one in our society is left behind, and if we are to ensure that a just and managed transition helps us to deal with our abiding constraints of poverty, inequality, and unemployment, we must choose the latter path. The solutions that we face are in your hands, and I can only urge you to apply those solutions with greater urgency. I thank you.
The transition to a low carbon and ultimately net zero economy is the most predictable and consequential economic transition, arguably in all of human history. And it is a transition with tremendous economic consequences for businesses, for industries, and indeed for entire countries. The banking sector has an essential role to play in the global transition, and South Africa's transition in particular, driving innovation through investments in cleaner products and greener energy at scale. If you had told even the most optimistic of the signers of the Paris Agreement as they huddled exhausted around Parisian conference tables in December of 2015, that 6 years later, you would have countries representing 90% of global GDP having made net zero commitments, and moreover, that private sector institutions representing over 100 trillion in assets under management would have made mid-century net zero pledges. Even those most optimistic officials would have looked at you like you were crazy. So, how much did COP26 move the needle? Well, as a result of late-breaking updates to nationally determined contributions and net zero commitments, including South Africa's NDC, which we enthusiastically applaud, combined with other emissions reductions pledges, including the Global Methane Pledge led by the United States and the European Union, the International Energy Agency now assesses that current announced pledges and commitments could, if enacted, limit global warming to 1.8 degrees Celsius above pre-industrial levels by the end of the century. So we're not yet at 1.5 degrees, but we're approaching it. This, of course, makes some big assumptions. This makes assumptions that we can act on the commitments we've made. So the commitments are a start, but now urgent action is required, and we must all be held to account for our commitments. Estimates are today that we need an additional $2 to $3 trillion annually of investment beginning today to be on a pathway to achieve 2050 net zero targets, with the total price tag for achieving net zero likely to be in excess of 100 trillion. This capital must come from the private sector.
There are a couple of things that were really important as outcomes of COP. One is multilateralism was entrenched, even though the US and China made this agreement on the side that was kind of important, but it also recognized multilateralism and it recognized the science. And these are important things because they were under threat during the Trump era. And so multilateralism and the acknowledgement of the science were kind of key enablers of what was to happen next. Establishment of an annual mitigation ambition work program combined with ministerial roundtables is probably the key outcome of COP for me. So we talked about this ratcheting of ambition. We talked about the necessary ambition aligned with unlocking finance. And so now what the COP has put in place is this invitation to update your NDCs more quickly or more frequently, with the first update being due then next year and perhaps annually thereafter, and then bringing in this ministerial level review. So that's key. So in South Africa, the conversation about ambition isn't over. We need to keep driving that. We need to keep driving it from business leadership. We need to keep driving it from the financial services sector. In addition to that, there will be an annual NDC synthesis by the UNFCCC that will help us gauge progress. But also, I guess, an important outcome was the finalization of the Paris rulebook, where we agreed rules on carbon trading, Article 6, enhanced transparency, and common timeframes for implementing the NDCs. And while that seems like a very techno outcome, it was a really important outcome because it allows us to start implementing the Paris Agreement and really truly concludes the Paris Agreement. Establishment of a just transition platform was a really key outcome for us in South Africa because we have this much more sensitive and sophisticated understanding of a just transition, and this is an opportunity for us to start talking to other countries about that and aligning capital flows and financial flows with those objectives. Enhancing access to finance, particularly for adaptation, was a procedural outcome, as well as launching a 2-year work program to operationalize the global goal on adaptation. And that's clearly an area that we need a lot more work on from the financial services sector. When you have nature-based solutions, you don't always have a cash flow that you can finance. You're often financing a deferred cost, which is obviously a much more complicated thing to finance. And so there's a lot of work for us as the financial services sector to do there. So COP27 in Egypt becomes really important. It's an African COP, so we hope we'll pick up some of the issues that are important to us in Africa, in particular the themes of adaptation and loss and damage, but also the particular circumstances of South Africa, of Africa as being one of the most vulnerable continents. We need to make a meaningful contribution to funding the just transition. So thinking about these up and down value chain opportunities built on these big asset investments, but also how we fund smaller deals, how we get those deals to interact with each other is something we as a community have to think about very carefully. And then, of course, we have to continue the pressure on enhanced ambition in the NDC and the LEDs, because that is our key route into attracting this concessional support. And that's where you come in. There is no community in South Africa can do this other than the business community and the financial services sector, with support from Treasury and the Reserve Bank and others. And so we really encourage you and are really thrilled about this 2-day conference, that we really get to the details of deliberating on these key issues.
Which leads me then to the hard nuts and bolts of what an initial energy transition might look like, with a fairly high portion of grant and concessional financing underpinning what would eventually be blended finance. In this context, I think we have all the makeup, all the potential as South Africa to become a leading light as it relates to what a just transition is, firstly, but secondly, to begin to find real practical financing solutions for the wide variety of challenges, whether they be mitigation, adaptation, or in this case, ameliorating the negative consequences of greening our economy. And when I talk about green revolution, what I mean is starting down a pathway of economic prosperity and growth that is financeable, private and public sector, blended finance, and that which sees us developing on the basis of our natural endowments a competitive position in the regional and the global economy.
I'd conclude by stressing that I think we kind of in a fork in the road. The question is not whether or not the transition is going to happen. The transition will unfold by global trends. The question is whether this transition is going to be just or whether it's going to be unjust. And we are on a trajectory globally and nationally where we are more leaning towards an unjust transition as it stands. So we are in a fork in the road. Can we make that transition just? And then can the financial sector, both public and private, play its role? I'd say by making deals more than buying deals, and actually being proactive in its contribution and ambitious is really the key question that we need to engage with. And that's going to have a massive impact on whether we can achieve a truly just transition going forward, and not just a low carbon transition, which obviously would not be just.
A stable financial system is going to be a prerequisite for just transition, because at the heart of transitioning is finance. And it's important for us to think about transition, not just within countries, but across countries, across industries as well. So my sense is that more work is required for us to have a broader conversation beyond just about the coal in Mpumalanga. What are the macroeconomic impacts of reducing 50 billion rand worth of export earnings from the South African economy? How do we replace those foreign currency earnings in order to reduce the risk of the balance of payments instability? How do we also deal with the inflationary impacts of the shift away from fossil fuels? Those of us who follow global macro developments would have seen that inflation is currently a global concern in the US and in the EU, and that's transmitted into inflation pressures in those markets. Now, this is just one example of how transition is not just a linear story about socio-economic development, it's also a macroeconomic stability question. Now, why is this important for us as banks? Fundamentally because the success of the banking sector is directly aligned to macroeconomic stability in any economy. Our ability to finance and support the financing of the transitioning, be it directly in financing our clients or investing in communities, will require macroeconomic stability. And this conversation, in my mind, has up to now been limited.
Everyone has to do their part. And someone spoke about financial institutions being proactive. Definitely. I think that's the big wheel that still needs to turn within the banks. We have to stop thinking about deals walk through the door, but go out and actually search out for these deals that will lead us to a greener and a more sustainable future. So a just transition is something that we have to be proactive about rather than be reactive.
There is this overemphasis on engineering infrastructure at the expense of ecological infrastructure, or to the neglect of ecological infrastructure. And that undermines the whole engineering system anyway. And the first people who feel the impact of those shocks and collapses in ecosystems are the poorest of the poor.
The 2020 biodiversity framework, which will be established next year, one of the main goals is urgent and transformative action. And it is doom and gloom. I don't want to say it isn't. There are lots of people that are incredibly passionate about preventing that. But we also need to recognize that it is business as usual in many different sectors. The UN recently said that in a study, only 18% of investments over the past year could be considered green and sustainable. We need to ramp up the action, and we need to scale up our discussions and our conversations and have them and make people understand that nature is everyone's business.
So, turning to South Africa, we all know that the country faces a number of challenges, including high unemployment, high inequality and poverty, a major debt burden, and a current reliance on coal, particularly in the energy sector. But notwithstanding these challenges, it is commendable that South Africa came to Glasgow with a bold and ambitious nationally determined contribution, with a range aligned to 2-degree global warming at the less ambitious end and 1.5-degree global warming at the most ambitious end. One of the biggest and most impactful announcements at COP26 was the Just Energy Transition Partnership agreed by South Africa with the UK, US, France, Germany, and the EU. The partnership aims to support the South African government in achieving its ambitious goals set out in its own nationally determined contribution. The partnership will mobilize an initial commitment of $8.5 billion for the first phase of financing through various financing mechanisms. And this first-of-a-kind agreement will help South Africa in delivering the highest levels of ambition set out in its own nationally determined contribution. We've already talked about how the global investment ecosystem is greening, the global economy is transitioning, and the role of the private sector and non-state actors are absolutely central to this, scaling up access to resources for ambitious climate action. And so let me finish just by saying that how you choose to deploy your resources will have a large impact on which companies, technologies, and projects succeed and flourish. And, I say, would have an impact on how successfully we tackle what is the key challenge for our planet in the coming decades.
SBFN recently published its third Global Progress Report, the most comprehensive benchmarking of sustainable finance progress across emerging markets. A dedicated country report on South Africa's progress was released yesterday to coincide with this event. Thanks to the combined activities of BASA, National Treasury and Prudential Authority, and others through the Climate Risk Forum, we are happy to see that South Africa continues to be in the advancing category by demonstrating best practice and multi-stakeholder collaboration. Notable developments include the new green finance taxonomy, which will support banks to direct more capital to green and inclusive activities while also managing environmental and social risk. IFC has a proven track record, not just in South Africa, but across emerging markets, and we will continue to walk the talk by providing leadership in the area of sustainable finance and unlocking private sector participation in the financial industry. There is still a lot that needs to be done to achieve the vision for the country that is laid out in the 2012 National Development Plan. We need to replicate what we know works, such as the private sector financing of the government RIPPP, which needs to scale significantly against a backdrop of fiscal constraint. We need to stop doing what we know does not work, such as taking a tick box reporting approach to ESG issues rather than integrating them into decision-making processes. And we need to collaborate even more to scale up sustainable finance opportunities and foster greater innovation across the sector.
Is sustainable finance doing what it needs to do? Is the money really supporting sustainable development? So we've listened to the different points here. How are products, finance products, catering for the social and the natural issues here? So we're looking at things like biodiversity, social sustainability, the just transition, which has already been mentioned. I know I've given you a big ask there, but just very quickly from your perspective, are we really supporting these things? And if so, how?
Sure. So Shamila, I think it's easier to see how we're impacting and helping from the environmental perspective, not from a biodiversity perspective. I think we need to do a lot more work going forward on that side, but certainly from a climate perspective. From a social perspective, I think we need to be a lot more creative. Too many corporates are just looking at their own diversity. You know, as an example, and going, okay, well, we'll just appoint more females on the board, and now we've met that. For me, what's exciting is what you can actually do through your businesses, through these types of loans and bonds, etc. So, for example, in our UK business, we did a sustainability-linked loan with a company that does learning and development and training. And it was linked to 4 KPIs, and those KPIs were very specific around diversity, gender, from a gender perspective, from a ethnicity, from a disability, and even from a youth perspective. And that's where, as banks, we can have a much greater impact.
Everybody talks about, you know, are we doing enough from a sustainable finance perspective? Are the proceeds going towards green? I think some of them are, but that's not always the objective. The money doesn't always have to go to green. To the extent it's for an underlying asset, yes, that's fine. But it's more a case of us trying to help a company that's trying to understand what they are doing. So when they're trying to measure and monitor, and then trying to move in the right direction, it's almost helping them in that journey as they move towards being net zero or whatever it might be. So I think from a sustainable finance perspective, there's massive opportunity in this space. And I think, you know, all corporates should be considering this in one form or another.
And I would say kind of the social side, I think a part that we're playing in, which in my mind is a huge part of sustainability, is really enterprise supply development. Kind of these corporates, their supply chains, if we localize those supply chains and if we help those small businesses kind of in that way, I think it's incredibly impactful in its own way and is sustainable finance in its own right. So those sorts of things, affordable housing, in my mind, that kind of really starts ticking the sustainable development side. Because as we enhance job creation, that impacts families, that impacts lives, that's really impactful.
So if you have a look at capital flows, I'm very encouraged that there is more money generally going towards the SDGs and climate. I think as kind of African banks, we've got a critical role to play in closing the infrastructure gap, and I think you know, I think sustainable finance has an important role to play there as well.
Sure, I think sustainable finance is going to be our lever to drive sustainable growth, especially in the context of our country. And if we can use sustainable finance in a manner that helps reduce the risk in the system, and that impact that we create actually feeds into risk mitigation, then I think we're setting ourselves up in a manner that can only allow us to flourish into the future. So it's an extremely critical lever for us to move forward in South Africa as well as Africa, and definitely to tap into those pools of liquidity and partnerships and platforms and products to ensure that we can unleash as much commercial and sustainable value and impact simultaneously.
I think we all agree that we've made real progress on an issue that is critical not just to our sector and our country, but also to the future of the entire planet, how we can help finance a just climate transition. South Africa is hardly a laggard in sustainability thinking. The Johannesburg Stock Exchange was the first in the world to launch a sustainability index back in May 2004. The local banking sector established the BARSA Sustainable Finance Committee in 2011, when the topic was barely on the radar screen of many of our global peers. And in the ensuing years, South African banks have continued to build on their commitment to incorporate social and environmental risk considerations into their lending and investment activities. We are amongst the best performing emerging markets on the Sustainable Banking and Finance Network rankings. And with the commitments you've heard reiterated over the last 2 days, it's not difficult to see why. It was particularly encouraging to have a session dedicated to the importance of biodiversity and nature-related risks and financing opportunities. This is a new area that will require a collaborative approach to ensure we convert the high-level guidelines into practical recommendations that we can all implement. Without the biological diversity and a nature-rich world, there is no future for humanity. We know that the financial sector globally has a critical role to play in the financing of a clean carbon transition. In South Africa, we have an even more important responsibility to ensure that the transition is fair and inclusive as well as green. We've already embraced this responsibility and, as we've heard from the speakers over the last few days, a concerted and collective effort is underway to establish South African banks as proactive, committed stakeholders that can demonstrate to the rest of the world how an emerging economy can lead in this space. This was evident in the 135 billion rand financing pledge from the developed world in the first week of COP26. We don't know exactly yet how these funds will be mobilized or prioritized, or what conditions will be attached to this financing. But various private sector bodies have lent in-principle support, and our banks here in South Africa are ready to participate in efforts to fund a just energy transition. In fact, as we've heard today, banks are already directing significant sustainable finance capital to this end, and we look forward to deeper participation as we turn pledges into much-needed action. I also need to acknowledge the challenges we are experiencing and the blockages that need to be overcome. Expanding our climate-related disclosures will require better data and a more aligned scientific approach to sustainability and climate reporting. So it's encouraging to see the collaboration between investors, the South African Reserve Bank, the Prudential Authority, National Treasury, and other key government departments and other financial sector stakeholders. All of these parties must work together to identify gaps, address inconsistencies, and find meaningful solutions. We're equally encouraged by the action taken by our government to establish the Presidential Climate Commission and the Climate Risk Forum. These initiatives, together with the revised and more ambitious nationally determined contributions made ahead of COP26, give me hope that South Africa is willing to take the bold steps required to combat the climate crisis. In closing, I'd like to thank the participating banks, as well as the keynote speakers, moderators, and panelists for their invaluable contributions. And of course, I must acknowledge the leadership shown by BARSA Executive in supporting and representing the financial sector in this journey towards a sustainable future. As we reflect on the outcomes of this conference, let's also remain focused on the task at hand to ensure that as we continue to finance a clean and just transition, we also remain focused on building a resilient, inclusive, and growing economy. I thank you very much.